Hello guys, this is ForexTeacha. In today's video, I just want to introduce a new 2021 Forex trading strategy. So this Forex trading strategy is actually based on US dollar index, which means we only be trading US dollar pairs. So for those who are new to Forex trading, I'm going to explain what is a US dollar index. And then after that, I'm going to show you step by step how to use the trading strategy to benefit you. First of all, allow me to explain in layman's terms. A US dollar index is just a way to measure the value or strength of a US dollar. The US dollar index is just like another forex pair. The only difference is that a normal forex pair like pound US dollar is made out of two currencies, which is pound and US dollar as it describes. A US dollar index is made up of 8 currencies. On the other hand, you get a US dollar. On the other side, there's a basket of currencies, 8 major currencies that trade with the US dollar. In that basket of currencies, you will find a pound, euro, Australian dollar, Canadian dollar, New Zealand dollar, Swiss franc, and the Japanese yen. So it doesn't necessarily mean that if the US dollar index is stronger, the US dollar is stronger than all the currencies in the basket. And it doesn't mean that if the US dollar index is weaker, the US dollar is weaker than all the currencies in the basket. It simply means the US dollar is stronger or weaker than the majority of all the currencies in the basket. So let's just take as an example, a real life example. When you have two candidates and they are all presidential candidates, right? We are voting. When people are voting, it doesn't mean that the one who wins is the one who is what? Who got all the votes. All right. It simply means the majority of the votes, they are supporting him. All right. So let's just get to the chart so that I can show you some live trade examples. What you see right here on the bottom of the chart, this is my trading system. The red thick line represents a US dollar. So if the red thick US dollar line crosses above the yellow and the green, it means the US dollar is very strong. But keep it in mind, it is stronger than the majority of the currencies, which means the majority it can be, since we are trading against 7 major currencies, it means it can be just 4 currencies and then weaker than the other 3. But in most cases, when it's stronger, it means it's stronger than above 5 and above. And then the same thing also, if it's weak, it means it's weaker than 5 or above. All right. So this gives us an advantage that whenever we are placing our trades, the majority of those trades are most likely to win. All right. Because we are actually using logic. So if the red thick line crosses below the yellow and the green lines, it simply means the US dollar is very, very weak. So if we go to our chart, I'm going to show you exactly when the chart crosses. So if at any point you like this strategy or you want to have this strategy, you want to try it out, first like my video and then write me an email. I'm going to put my email address on the screen. So let me quickly just share with you guys step by step. Right here where you see here on this line, I've put some lines so that it's easier for me to show you. I've put this line here, this vertical line right here. If you follow it going down, you should see that the US dollar is what? The US dollar index. This box where you see the indicator, the red line represents the US dollar. So if it crosses above the green and the yellow, it means the US dollar is very, very strong. So if you are trading a pair like this one, like US dollar, USDJPY, as soon as it crosses, you see that it start going up right here. So we're going to take our buy trade right here. All right. So let's just quickly highlight where it shows the strength of a US dollar. All right. You can see that it was going up all the way. All right. This was just an easy way to make money. All right. An easy way to make pips. It's pips before money. So this is about 695 pips. All right. This is on USDJPY. And if you go to another currency right here, I'm just simply going to drag this is now USD card. I can also show you on the same time frame or same time right here. All right, USD card, if it crosses above the yellow and green, means the US dollar is strong. So we are only taking buy trades. All right, this is almost this is 857 pips. So I don't want to waste a lot of time. I'm going to drag another chart, which is USD Swiss franc. USD Swiss franc. All right, you can see also the same thing happened. The US dollar is going what? Up. Was it strong? This is about 500 pips. You also go to USD Euro USD. All right, on the same chart on Euro USD, let me quickly highlight so that I show you. This is where when it crossed above. All right, so you can see that since it's a Euro USD, when the US dollar is strong, the price or the chart will go down. All right, this is about 594 pips. All right, so the same applies if you are trading pound US dollar. We end right here. It kept on going down all the way from up here. All right, this is almost 1,200 pips. So you go to Australian dollar, out USD, that's the same thing happening. It's going down. You can go to New Zealand dollar as well. It will be going down. Okay, on this example, it was stronger than all the pairs. All right, but in some cases you find out it's weaker than one of the it was stronger than all the currencies, but in some cases you find out it's weaker than one of the currencies. All right, one or two, but as long as the majority is saying it's strong, it will decide whether it's going up or down. So this is, let's just quickly scroll back, because I don't want to show you where it's easy to see. I want to show you also on this chart right here, when it crossed below. If you go down on this line here, it crossed below, which means the US dollar is very, very weak. So what we expect the price to do right now is, since we are trading the New Zealand US dollar, all right, we expect the price, since it's weak, we expect the price to go up. So in this case, it didn't go up as we planned, but it went down. All right, it went down, which means the US dollar was weak, but it was still stronger than the what? Than the New Zealand dollar. So you can also go to other pairs. The same pattern almost happened, but in this case, I think it only went up about 30 pips, and then 70 pips, 80 pips, all right, before it turned back. So we can also go to pound US dollar right here. You're going to see the same pattern happen, but on a different level, since it's stronger than the US dollar most. Since it was stronger than the pound was stronger than the US dollar. You can see it went all the way 261 pips. If you go here, Euro USD, you see the same thing when it happened. The euro was actually more stronger, it actually went all the way 600 pips. So you can see that the other pairs were just losing just a bit. So the next pair we are going to look at is just USD CHF, all right, Swiss franc. So since it's weak, if it's a US dollar Swiss franc, it means we are going down because the US dollar is weak. It went down about 600 pips. If you go to USD CAD, if it's weak, we also expect it to go down. And on this one, it didn't go down. So it only went up. We're going to lose on this one. So the good thing about this, the majority of the pairs, it will be what? In your favor. So let's go to USD JPY right here. It was weak right here. So you can see that it went down all the way about 900 pips. All right, so you can compare all the wins and the losses on this chart. All right, you can see that you are going to make profit, guys, no matter which trade that you take. So this was just one of two of the examples. I can also show you right here. This is USD JPY. As soon as it crossed below, which means the US dollar is weak, so the price is going to go down. That's why it started going down from here to here. All right, the same thing, even if you go to USD CAD, you're going to expect the same thing to happen. It also went down from here to about 300 pips. USD CHF, it also went down. That's about 248 pips. So now we go to a Euro USD. When the Euro USD, then the USD is weak, we expect it to go up, which is what happened right here. It went all the way 260 pips. We can also go to Pound USD. Since it crosses below the yellow and the green, it simply means the US dollar is weak. So we are expecting to go up the Pound USD. So it went all the way up 623 pips. So I can carry on and show you guys all these kind of examples. So this was just a losing trade right here. It wasn't a big losing trade because it didn't actually close it didn't cross, it just went on the line. So this was actually not a valid trade. But even if I took this trade, I think it was just going to be what? A small losing trade. But I don't end a trade like this. So I wait for the US dollar to what? To gain strength, which is exactly what happened right here. When it crosses above the green and the yellow, we expect it to go. Since this one is a Pound USD, we expect it to go down, which is exactly what it did. It went down about 256 pips before turning back. So we can go to another pair, which is Australian dollar. On the same chart, since it's weak, since it's strong, we expect it to go down. All right, on ours out USD, it only went down about 55 pips and then went in the opposite direction. So don't worry, you are not going to close your trade right here on this loss here, because we are going to look at the same thing here when it crosses this yellow line right here. All right, when it crosses the yellow line right here, that's when we exit. So you find out if you had enter your sell trade right here and then it just didn't go your way, you're only going to lose at least 100 pips in this case, but in most cases it's less than 80 pips. All right, so it doesn't matter even if you lose 100 pips, because on the winning trades you are going to make back that money. All right, so you can go let me show you the New Zealand one. Since it's strong, we expect it to go down, which is exactly what it did right here. All right, about 70 pips in profit before turning back. So we can also go to USD JPY. Since it's strong, it means it's going up. So we expect it to go up, which is about 200 pips. You see that you can easily cover that loss. And then USD CAD, since it's strong, we can also expect it to go up. But this one just went up a bit, about 100 pips before turning back. USD CHF, we expect it to go up, which is exactly what it did right here. About 100 pips in profit. So you can see that they cancel each other. So with a bit of money management and the discipline, you can see that you can easily make a lot of pips. All right, you can go on to the next signals as well. You are going to see this was just going to be when it crosses below USD Swiss franc, we expect it to go down, which was just another win. Right here, this was another win, because it also continued to go up about 112 pips. When it crosses below, you see that it went down about 138 pips. I can just pick any. I will show you guys. This was another easy win. This is about 200 pips. Right here, when it crosses above the green and the yellow, which means the dollar is strong. So you expect it to go down if you are trading Pound USD, which is 230 pips right here. It crosses back down. We expect it to go up, which is about 200 pips. So I can show you any US dollar pairs. It's not very strong when it comes to trading gold or this symbol for gold, but you can still make a lot of money, because as you can see right here, you can follow it. You can easily follow it right here. When it crosses below this, when it crosses above, it means we're expecting to go down, since the US dollar is strong. This was 500 pips on gold. Here the dollar is weakened. It actually weakened on this end right here. All right, that's when it went weak. So we're going to take a trade which is 900 pips in profit. All right, and I'm only showing you these examples on a daily chart, on a 4-hour chart. This system can be used on any time frame. So if at any point you think this video is very informative or it's very helpful, please don't forget to hit the like button to motivate me to share more strategies. And if you want to have this trading strategy, you can also contact me. But first, before you contact me, I want you to like this video, share with your friends, and then you come to me. So this is just how easy it is to trade. This is just another simple win right here. It crosses below, it went all the way up. All right, so this trading strategy, it actually helps you because there's no need for you to be thinking of market manipulation or thinking of what is going to move the markets. All right, it's just simple in front of you. You don't need to know what moves the markets for you to make money in Forex. And you don't need to know where the market is going for you to make pips. All right. So this is how simple it is to trade Forex. And that's how simple I trade myself. So I just don't want to complicate things because Forex trading on its own is very, very difficult. So if you find a complicated strategy, it means you are only going to be giving back the money to the market. So thank you for watching the video, guys. If you have watched this video up to this end, don't forget to hit the like button and give us the support, guys. All these positive comments, if you think this video is very helpful or it can also help you in the future, you can also combine it with your own trading strategies so that you make a lot of Forex pips. So thank you for watching this video, guys, and good luck with your trading. Don't forget to contact me so that I give you the Forex trading system that I'm using.